I think we've got good numbers now, so we'll get underway. Good morning, everybody. I'm Susan Szymborski-Welsh. I'm the Woodland Carbon Code's Communications Officer. I'd like to welcome you all and thank you very much for joining our webinar this morning on the topic of tax. Our presenters, Lisa McPherson-Fletcher, a partner at RSM UK, and Helen Thornley, a technical officer at the Association of Taxation Technicians, will run through some of the key considerations involved in Woodland Carbon Code and Peatland Code projects. After the presentations, we'll open out the discussions to answer any questions you may have. So please do pop them in the chat feature and we'll come to them at the end. We also have Vicky from the Woodland Carbon Code and Garance from the Peatland Code, who'll be on hand to help answer your questions at the end too. I should also highlight that we're recording today's session so that anyone who misses it can watch it back, and we'll make that available on our websites shortly after the session. I think that's all I have to say for now, so I'll hand straight over to Lisa for the start of the presentation. Thank you.
Thank you, Susan. I'm just going to share my screen. There we go. So tax considerations for Woodland and Peatland Carbon Code projects. So just in terms of what we are going to run through, it's just to set out that we are very much discussing here from a landowner's perspective. It's becoming clear as the market develops that there is a secondary market for credits and for units, but given the time constraints here and the technical considerations, we are principally focusing on the landowner's perspective. I'm then going to cover off planting or restoring your peatland and some of the considerations on an ongoing project, and then the sales of either PIUs or carbon credits. I'm then going to pass over to Helen, who will look at gifting and the inheritance tax considerations for projects that are underway. We've then got quite a decent question and answers session. Because so many of these projects are bespoke, that's where you'll hopefully get the value. I am able to take questions afterwards, you know, if you email me separately if we run out of time today. So looking at the position here, do I need to minimize that bit? There we go. From the landowner's perspective, before we even get to the accounts and tax position, which is my final box there down at the bottom, we need to make sure that we understand the legal position of who owns the land, which structure is it owned through, because that will all have an impact on the tax position, whether we've got a corporate structure in place, whether we've got a partnership in place, if we're looking at sole traders. This is all the sort of base information that we need to be really, really familiar with before we can advise on the tax position. We also need to be very clear on any rights over the land and where those are held. So I saw on the delegates that were coming in there that we've got some legal specialists and they will be very, very aware that you can have lands held by different individuals or rights in the land held by different individuals. And so when we're providing our tax advice, we need to be absolutely clear who has the rights to the carbon, to exploit the carbon, who is the owner of the land. Are there any tenants in place? And so there we've got leases. What does that lease enable the tenant to do? Do they have the right to plant and exploit the carbon in the land? This is all the background information that we need to be thinking about. It's also really important from the outset of any project, and it does apply here for the Woodland Carbon Code or Peatland Carbon Code, but actually this applies to any work that I do, advising clients in respect of a tax position, is to think about the future aims. So we want to be looking at how long this land is going to be held by the individual who owns it at the moment or the corporate, what are the future aims, because we don't want to put anything in place that is maybe restrictive from a tax position further down the line. And that ties into what Helen will be talking about from an inheritance tax perspective. So once we've bottomed out all the legal position and who has what at the underlying in the land, we can then move on to looking at the accounting and the tax position. It's quite well known within our world that the legal position will always be the basis. We then move on to the accounting position, which will be based on the legal position, and the tax is almost the final element that we look at, which will be based on the accounting position. So that's the reason that I've highlighted that sort of hierarchy of working through the information. It's not letting me move my screen. Oh no. Okay. Planting and restoring. So we've established who the landowner is, and we're either wanting to plant some woodlands under the Woodland Carbon Code, or we've got some peatland that needs to be restored under the Peatland Carbon Code. So a lot of the funding for these projects, and there are specialists and firms who can assist with designing your planting or the peatland restoration, and they are then able to help you applying for the grants that are available. A lot of the initial costs can be covered by those grants that are available. What we are seeing more and more in the marketplace is that the landowners are being expected to provide some element of input themselves into the project, but there's still a big element of grant that's in there. The grant that is available matches to expenses that are incurred on the project. So in theory, they should net off against each other. So there shouldn't actually be any tax implications there necessarily, because whatever is received is going straight out in cost. And so they net off. But it's really important to think about this from a cash flow perspective to manage the timings. And I know that there can be some quite significant delays and problems with cash flow. So that's one thing to think about. The VAT position in respect of the planting or the peatland restoration has changed quite recently. So that was in September last year. So up until September, 1st of September last year, the government HMRC had said that the sale of carbon credits and therefore any work done in relation to them was sort of not within the scope of VAT. So we didn't look at the VAT position, and in theory the VAT shouldn't have been reclaimed on any of the costs of creating woodlands or restoring peatland. However, because of these changes in the market as everything's developing, HMRC have now realised that there is potentially an onward market for the carbon credits. And so from the 1st of September, the sale of carbon credits or the PIUs has been within the scope of VAT. And so standard rate VAT 20% should be added on to the sale of any units. And that then enables the reclaim of any VAT incurred through the planting of the woodlands or the restoring of the peatland. I'm not a VAT specialist. It's very different from looking at direct taxes. But having spoken to one of our VAT specialists in-house, he did say that there's a bit of uncertainty there on what happens if you have incurred costs pre-1st of September 2024, but you haven't actually sold any of the PIU or units carbon credits yet. He is of the opinion that there may be scope to go back and look at reclaiming some of the VAT that has been incurred to date. And so that's one point maybe for people to bear in mind, and to have a look at what has happened, and is there scope to reclaim any VAT that hasn't been reclaimed in the past. On an ongoing basis, we're far more likely, once you're up and running and the trees have been planted, your fences have been put in place, or the peatland has been restored and again fences put in place, there are going to be ongoing costs in relation to managing either the trees or the peatland. They might not be significant costs, but they will be there. So what do we do with those costs? Well, our view is that the landowner in effect is providing akin to a service, or creating an asset, so it's sort of like a manufacturing in a way, I guess, where they are providing something that generates the carbon credits. And so what that then means is we're looking at income tax when there is a sale of PRUs or carbon credits in the future. Under the Woodland Carbon Code, there is a strong argument commercial occupation of forestry has a specific exemption for income tax purposes and potentially for capital gains tax purposes in the future too. And there is no definition in the tax legislation of what commercial is. And so we would argue that there is a scope to say that maintaining woodlands under the Woodland Carbon Code is a new definition of commercial. It's still commercial. We've been through a whole additionality calculation to get to where you're going to. There is a view to the sale of units or credits in the future. And therefore, there is scope to say that when any units are sold or credits are sold, that's not charged to income tax because it's generated from the commercial occupation of woodlands. The flip side of that is it does mean that those costs on an ongoing basis are not tax deductible. So that's in relation to the woodlands position. The peatlands position is quite different because that exemption that I mentioned is specific to woodlands, and therefore we're going to have a taxable element potentially when you have peatlands and the sale of units. It will depend on what the proceeds are, on what costs have been incurred over the piece, and whether there is actually any profit realised. There's an important timing point to think about where a PRU has been sold, so a pending issuance unit has been sold. That's a promise to deliver carbon at some point in the future. So there is potentially scope under the accounting regulations to spread the timing of that income over the period in which the carbon is being generated. And then that might match more neatly with the expenses that have been incurred over a period. However, if they are complete validated carbon credits that are sold, it's more likely that payment is going to be taxed at the time that the payment is received. And you may have brought forward losses that would offset that taxable income, or potentially the losses have gone elsewhere. If we have a strong enough case that it's operated with a view to a profit for it to be a commercial business. But think about the timing points there. Okay, so what about the position on the sale of a PRU or a carbon credit? One thing we need to think about to start with is whether we're actually looking at selling the underlying asset, the land, with the trees that are growing or with the restored peatland, or are we selling the PRUs or the carbon credits separate from the land? Helen is going to look at gifting, and so I'm going to let her deal with the sale of the land effectively through the gift, and I'm going to cover here the tax position on the sale of the PRUs or the carbon credits as separate from the land. So I'm considering that the landowner is keeping the land and just selling the units that he has generated. So there are standard contracts that are available, and these have been created with 3 law firms working together to collaborate to come up with standard contracts that are available. So if an individual is now looking to sell either units or carbon credits, those legal agreements provide a strong basis upon which any contract should be formed. Clearly, they need to take their own legal advice and tailor it for the specifics. But it's a really positive step that process has been standardized, because the contracts were very, very different for a while. Where we are looking at the Woodland Carbon Code, as I've covered off, we've got that specific exemption. So I do think we're coming into the income tax legislation and looking at that commercial occupation of woodlands, and there should be an exemption there. However, because we don't have any specific guidance, the point here to do with the sale and the point to pull out is that we need to make a full disclosure that is how we are treating the disposal of those units or those carbon credits. So the tax return, whether that be a corporation tax return or a personal tax return, partnership tax return, we need to know what has happened. And the reason for that is if at some point HMRC were to come and ask questions about what's happened, any disclosure and the base principles that have been relied on here can protect the taxpayer from penalties in the future. So if HMRC are to come and say, actually, we disagree with that treatment because we don't have certainty, we still don't have certainty, then the full disclosure provides an element of protection for the taxpayer because there has been a sound basis upon which the tax return has been prepared. From the Peatland perspective, again, that's going to need to go through either through an existing business, as part of an existing business, the income reflected through there, or as a standalone business if the individual has the land that they've restored the peatland on and doesn't have other activities, such as farming or traditional commercial forestry. In all cases, I would say report to HMRC, full disclosure, and that's protecting the position. The VAT point is pulled in there to highlight again, and that pulls into the standard contracts that are available. So that standard contract has a specific VAT clause that says that the proceeds that are included within that contract do not include VAT, and that where we're in the VAT regime, the person selling is VAT registered and needs to charge VAT, then the person buying the PIU or the credit undertakes to pay VAT at 20% in respect of the sale proceeds. That's a really, really quick run through of the ongoing income tax concerns and what happens when you're actually selling and looking at the expenses. And I'm going to hand over to Helen now to run through the inheritance tax and gifting position.
Oh, thank you very much, Lisa. Yeah, so it's my turn now for the high-level whistle-stop tour. So I'm just going to look at gifting, inheritance tax, and I'll just very briefly mention some of the working groups, which is how I've got involved with this at the end. So if we kick off with just the kind of gifting, and there's generally two taxes to think about when you're looking at gifting. There's capital gains tax and there's inheritance tax. You may also be worried about stamp duty land tax, or in Scotland, land and building transaction tax if you've got a mortgage on that land, but I'm going to set that aside for now. And the question I kind of wanted to try and answer today is, how does being in a scheme affect your CGT and in IHT position? So with capital gains tax, you make a gift. Normally, when you sell an asset, you pay capital gains tax on the difference between the price that you bought it for and what you sold it for, less some adjustments for improvements. When you gift something, I think a lot of people tend to think, oh, well, I've gifted it, there's no money coming in. But there's still tax, because the revenue will deem the disposal to occur at market value if you're gifting to a connected person. And 9 times out of 10, in fact, 99 times out of 100, I've never seen an unconnected gift. You're gifting to family or someone to whom you are related to. That means what we need to do to start with is we need to value. So to calculate what the gain is, to know what we're dealing with, we need to know the difference between the market value now and the value when you acquired it. And that valuation is really critical. And we've also kind of got to ask, what are we disposing of? And this is where there is a degree of uncertainty, because on the one hand, what you're disposing of is you're making a gift of land that's got some trees on it. But you're also making, arguably, you're gifting kind of the PIUs and the potential carbon credits, or it might be that you've sold your PIUs, or you've sold some of your carbon credits, or a bit of a mix. So understanding exactly what we're gifting here is key. And one of the things we've struggled with in our group and is to kind of go, well, are we making a gift of just the one thing, which is the land and the trees, or are we also making a separate gift of kind of these intangible units? And there isn't any kind of a guidance, and this is something that hopefully we can work with HMRC on to get some clarity, because I know that different advisors are taking different perspectives on this. But essentially what you're gifting is land with some trees, and the value of that will be affected very heavily by what you have done with the credits. If you've sold all of your credits and there's no future value to get from those credits, although potentially there might be value from new credit schemes as they're introduced, then that's got to impact on the value of what you're passing over. If you're looking to pass over land where it's been validated and you've got all these PIUs, then there is a potential additional income from that has got to kind of enhance the value. So the key thing is getting a good valuer involved who understands what you're doing and where you're at. Once you've kind of established what the gain is, then typically it's taxed at 18 or 24%, depending on the size of the gain and the income tax rate of the individual taxpayer. So we're looking then for what reliefs are available. And the classic relief we're looking for is holdover relief. And that allows you to defer the gain. So you pass it over to the person who receives it, and they effectively, instead of you paying the gain, they take on what we call your base cost. They take on the position, the value of the land when you acquired it. And when they sell the land, they will pay the gain. So if you bought some land for 100,000, it's now worth $1 million, there's a gain of 900,000. Instead of paying tax on the 900,000, when you give it, you sign a joint declaration with the person receiving it, and they say, when I sell it, I will pay tax from the £100,000 point. So holdover relief applies where you're disposing of a business asset or agricultural land. So the implications of the schemes are, if you've got woodland, is this a commercial woodland? And in which case we can argue that it is then a business asset and you can have holdover relief. When it comes to peatland, I'm a little less clear, I'm more of a policy role as to kind of what you're doing in practice. Because is that peatland still agricultural land? Are you still doing anything agricultural on it? Or have you actually completely destocked it? So I think I've got some uncertainty of how holdover relief and peatland will work, because it will depend on what actually you're doing on that area. In terms of inheritance tax, the other relevant gift as an individual, if you're making a gift, is that it's the 7-year rule. So when someone dies, you look at the value of their estate and you add back in gifts in the previous 7 years. So you need to take account of any gifts that they made in the 7 years before death. So that's where the 7-year rule comes in. Now, if you can have agricultural business property relief on the asset that you have gifted, and it's still available when you die, then that is less of an issue. We'll talk about some of the restrictions on agricultural and business property relief on the next slide. But that's where we need to think about what the person that you're gifting to is going to do with the land, because if you're going to gift them some woodland and their intention is to sell it and you die within 7 years of the gift, then the BPR that was available when you gifted it is then going to be no longer available because the individual has sold it on. So there needs to be thought given to what that person receiving the land is going to do with it. In terms of the inheritance tax relief, there's kind of 4 reliefs that we need to be thinking of. If you can, yes, we're on the slide, sorry. I've got 2 screens, my slides and the ones I'm looking at. So I'm just going to do a quick sort of whistle-stop tour of agricultural property and business property relief. At the bottom, obviously, I'm sure you're all aware, you will not have missed the fact that there is going to be a cap on the amount that you can have of these reliefs at 100%. So both APR and BPR you can have for qualifying assets, they either qualify at 100% or 50%. And the government have said that from April 26, the amount you can have at 100% will be capped at £1 million. I kind of think let's just set that aside, because the issue is initially, is your land within these schemes going to qualify? So in terms of agricultural property relief, we're focusing agricultural land and buildings. You need to own it or occupy it own and occupy it for 2 years, or own and somebody else needs to have occupied it for the purposes of agriculture for 7 years. Woodlands only qualify for APR if they're ancillary, so your shelter belts, and kind of if they're ancillary to the agricultural operations. HMRC guidance says once you've planted woodland, you have taken it out of agricultural property relief. However, agricultural property might be relevant to your peatland, again, depending on what you're doing with it. And this is something I've never quite fully understood as to how much, if any, agricultural activities can still go on the restored peatland. So for your woodland, you're looking for business property relief. And that's where we're looking for, if it's a commercial woodland, it can qualify for 100% inheritance tax relief. And of course, as Lisa says, we've not got a definition of commercial woodland, but what HMRC have said in their guidance is that they would not generally consider woodland or peatland schemes to be investment. And that is a good thing. We want it to be viewed as a trading activity, or at least not viewed as investment, so that it can come within the BPR relief position. The other relevant point just to make about agricultural property relief is there has been some extensions to land manage under an environmental agreement. And I wondered initially if that would help us with peatland, because here we are, we're managing land in an environmentally positive manner. but actually the extension that we've got to agricultural property relief is not intended to benefit the carbon schemes at the moment. So I understand from talking to the CLA that that's something that there may change, or we'll need to kind of make representations for change. But at the moment, there's so many carbon schemes, there's so much movement developing, the government didn't want to bring those in. So the current APR extension is really about land under the sustainable farming initiatives and the ELMS initiatives. The other thing where going into a scheme might be relevant to agricultural property relief is agricultural property relief on a farmhouse is only available if it's of character appropriate. So if you've got 300 acres and a farmhouse, and then you put all of the 300 acres into schemes, I think that would call into question whether or not your farmhouse was still character appropriate, as to whether or not, you know, if you plan to turn it all to woodland, is there any need? The reason we have APR on farmland, on farmhouses, is because you need to have the farmhouse in order to look after the stock. You need to be on site. As we move more into these schemes, it undermines that argument. So again, if you move a lot of land into schemes, and you're losing agricultural property relief on that land, then that could also put the relief at your farmhouse under risk as well. So that's the sort of couple of issues to think about. And then just very quickly, because of the restrictions on APR and BPR, if we can pop onto the next slide, please, there are a couple of other inheritance tax options to think about. There is, of course, woodlands relief. I never used it in practice because it's not actually a proper relief, it's just a deferral of the tax. But it's something to be aware of. It does exist, it's only available on death. It applies to the value of the growing timber, so it can remove the value of the growing timber from the estate for inheritance tax purposes, but it doesn't deal with the underlying land. So you have to get someone to value what is the value of the land and what are the values of the trees upon it. And then that inheritance tax charge on the timber comes back into charge when you then come to sell the timber. The other one just to be aware of that is increasingly something to be a little bit more, again, not something that's been popular particularly in the past, but is now a little bit more interesting because of the restrictions on APR and BPR, is there is something called conditional exemption. And this tends to be, this is a relief to allow you to preserve sort of Britain's heritage, pass it down the generation without inheritance tax, but the inheritance tax would come back into charge plus capital gains tax if your descendants then sell the property. So we're talking about kind of heritage property here, so typically stately or important homes, land and gardens of outstanding scenic or historical interest. So not immediately relevant to our woodlands because we're looking generally at ancient semi-natural woodlands would qualify. But if you're planting on land of outstanding scenic or historic interest, then two things to think about. If you've got conditional exemption, make sure that this isn't upsetting your conditions for conditional exemption. You're not destroying anything and that you're still allowing access to the public. And then secondly, whether planting broadleaf, planting something interesting might enhance where you are. So it's just something to think about, whether or not these schemes might impact on your ability to get conditional exemption, or if you're in conditional exemption, whether it might impact your ability to maintain it. And then very quickly, before we move to questions, I just wanted to mention a little bit. So obviously there's a lot of areas of uncertainty. So this is really, you don't feel like you're being useful because I'm not giving concrete answers. I'm kind of going, oh, this might not work. This could be a problem. So back in 2022, I had some members. So I work for a professional body. My members do tax compliance, and we work with the government and advise them on whether or not policies will work. We say it won't work. They ignore us. It doesn't work. We go, I told you so. It's a really, really satisfying job. But I had some members come to me and talk and say, look, we've got land in Scotland going into these forestry, the woodland schemes. We don't know how the tax would work. And that back in 2022. So I got together with Louise Speak at the Country Landowners Association, and we formed a group, a natural capital working group, which is how I met Vicky and Lisa and Renee from the Peatland Code. And there's a group of us who've been meeting to kind of discuss the tax issues. There was a consultation that the government put out in 23, and we fed into that the design of the consultation and also responded to it individually. And the end result of that, after some delays due to election of a new government and other things, is that there is now an ecosystems working group set up and run by HMRC. And we're looking at tax issues and getting HMRC to issue guidance so that we've got clarity, because what I'm feeling is that there's a lot of different advisors reaching subtly different conclusions. So we haven't got consistency across the market. Currently, this group is working on BNG, biodiversity net gain, because there was considered to be more urgency for that guidance, because that's holding up developments if developers can't get their BNG projects over the line. But Woodland is next on the agenda. Woodland and Peatland is where we want to go to next. So we're meeting again in June. We'll meet in a couple of weeks' time. We'll be meeting September and then December, and hopefully at some point in this year, guidance will start to emerge. We'll start to get some clarity. HMRC are thinking they're going to wrap this up within a year. I'm not entirely convinced. But while there isn't sort of space on that group, most of the professional bodies have got members on the group. And that equally, what I'd be happy to hear from people is if you've got scenarios where uncertainty with tax is giving you issues and it's, say, blocking you moving forward or raising concerns, really happy to hear anonymised examples. You know, feel free to kind of change the numbers so people can't tell that it's you. But if we can have examples of where there are problems, we can take them to this group and present them to HMRC to hopefully improve the chances of getting good quality guidance that we can all use. So that was just my little whistle-stop tour of some of the IHT and the groups issue. I haven't dared look. Have we got questions, Susan?
Thanks, Helen. Yes, we do indeed. We've had a couple of questions in so far, and if anyone else has any, please put them in the chat, and we'll have the next sort of 15 minutes just running through any questions people have. So our first question is from Chris, and he's asking about the issue of commerciality. If the units created are not being produced for sale, i.e. they are for insetting, does that mean that all other things being equal, the woodland would not be defined as commercial if there are no incomes from foreseen from timber or firewood?
Oh, that's interesting.
Yeah, it is interesting. I think if it's for insetting in a separate part of a business, so ancillary to another commercial business, there is still an argument there that they are commercially generated. If we're talking about what's the impact on that? Does that then mean that we're going to be able to claim costs? Just need to think through that process.
Yeah, because it's I mean, in terms of, because there isn't income coming in, it's not going to be relevant to the income side of things, but for inheritance tax, you'd want it to be commercial. So I think it kind of comes to that wider argument of what are you doing for and what's the wider enterprise. But actually that would be a good thing, I think, for us to raise in the group when we do get to Woodlands, because we haven't, some sort of statement of how HMRC would view the insetting would be really useful to understand. So I think that's one for us to take away as well, if that's okay.
Yeah.
Great, thank you. And we have a question from Jamie on the particular situation, and he's addressed it to Lisa. A landowner has a farming partnership and is keen to minimise tax exposures, brackets assume higher rate payers. The existing partnership already has a corporate land structure, company limited by shares, in place, which would offer the lower corporation tax rate on any income generated from ecosystem services. To avoid granting a lease to the CLS in order to minimise capital gains tax, stamp duty, land tax, and other potential tax implications, they license the ESS rights to the existing CLS. Would this allow revenues to be realised within the CLS without triggering lease-related tax implications? Quite a long question there.
Yeah, I think you need to pull a lawyer in there, because the question is more does a license pass sufficient rights to the corporate to enable the corporate to exploit the carbon, and then we would then also, so you've got the legal side to look at, we would then also need to consider the tax perspective and whether there is any anti-avoidance that looks into sort of an income shifting legislation. But presumably this is peatland that we're talking about rather than forestry anyway, rather than Woodlands, because if we were looking at Woodlands, a partnership works beautifully because you get the free flow up to the individual partners. So I need more information there, I think, to provide a full answer, but I've got legal queries, income shifting queries, and then actually which carbon code are we under, and do we really want to be locking it up into a corporate? The reason that if you have commercial forestry, or the sale of units that we're arguing is tax-free under the commercial forestry rules, if you have that going into a corporate, the corporate doesn't pay any corporation tax, but you then still have value in the company, and if you want to get that out, there is a dividend tax charge to get it out to the individual. So that's a sort of holistic, bigger picture. Possibly needs a lot more brain power expended on it.
Thanks, Lisa. Got another question from Chris here, directed towards Helen. Removing the tax relief on farmhouses that then become enveloped by woodland for the reasons you describe seems to imply that woodlands need no regular management. Surely that's why foresters had houses in woodlands to manage the trees, the deer and other browsing animals that might spoil the crop. With the deer and the squirrel issues endemic in the UK, you would think this would be a good argument for relief. So I guess that's more of a point rather than a question.
Yeah, that's really interesting. I know, because I think this is possibly slightly the difficulty of my role, because I know the CLA are doing a lot of work kind of to ensure that moving into schemes doesn't restrict the APR and farmhouses, because they're concerned that that would then lead to people not going into schemes. And I understand that, because we're a professional body, we have to be a little bit more careful as to kind of how we say things. But I do think we do have to kind of bear in mind, is that what is the purpose of the agricultural property relief on the farmhouse? So actually, if that's part of the reason, I think the challenge is the woodland is moving out of APR. So we'd have to think a lot more widely about how we were drawing. I totally see Chris's point, because that is relevant to the management and the being on hand, but at the moment that I'm not sure we can make that argument within the existing APR, because the woodland has moved out of APR into BPR.
Yeah, and that's the key point there, is you're moving from agricultural property relief, and the relief can extend to a farmhouse when the farmer needs to be on site, and so that's the relief when you've not got it planted. If you then move into planting and business property relief, you don't get business property relief where you've got individual occupation, but like duality of purpose and personal occupation of the property. So the problem there is shifting from one inheritance tax relief to the other, where there is sort of a historic connection with the land, to business property relief where it's just never recognised. And unless you don't tend to get business property relief in respect of a residential property, unless, for example, you've got a stately home that you're opening to the public, and in effect it's a museum and you do tours, and it has to be a very high level of service there to even get it in that case.
Great, thanks both. We've got another question here from Jamie. Hi Helen, is there an option to put land into a charity structure and benefit from tax benefits? What are the risks of this?
Well, that's interesting. I mean, yes, I mean, there are reliefs for gifting land into a charity. It's not something I've ever actually done in practice. I mean, I suppose there's the kind of tax risk. There's also all the practical risks around, loss of control of the asset. There's a limit to what you can get back in benefit from the charity, in terms of before you would start to lose the reliefs on having gifted it in the first place. I mean, that is something you could do, but I think there's probably, and you'd also need to think about how the charity's physically going to run it and manage it and do all the things that it's intending to do, and how it's going to fund it. So there's probably quite a lot of practical risks before you even kind of get to the tax side of things with something like that. I don't know if you've seen that in practice at all, Lisa. Clearly my clients weren't that generous.
Yeah, I have looked at it. I've never had a client actually go ahead because a lot of the rules around charities and the future use of the land and benefit of the land were kind of tightened up. Again, it's a very specialist area looking at charity law and charity tax. But I would say that needs to be looked at, as you say, Helen, legally, practically. What is the future use of the land? Where do you want the money to go? Is it a genuine charity? Before you even get to the tax position.
Perfect, thank you. We've had another couple of questions come in. We've got about 4 minutes left, so we'll try and rattle through them before we finish up. So Jamie's asking, how will tax considerations for payment for insetting / within value mitigation differ versus pure Woodland Carbon Code, Peatland Code schemes? Much more applicable for agricultural production given the supply chain, but seeing the growth of this market, what do farmers need to be aware of?
I'm seeing that as a sort of an expenses question. Is that coming back to your point earlier, Lisa, about relief for expenses for insetting?
Yeah.
So I'm presuming this is about creating the credits because farmers need to be seen to be managing and reducing their kind of carbon footprint as part of that. So again, it's part of that. It's back to what you were saying about part of the wider enterprise, isn't it? In terms of is this a necessary cost for the purposes of a wider business? So I think that's part of the issue with it. And to some extent, I mean, my understanding, particularly with the woodland schemes, is that a lot of the upfront costs are covered by grants as well, aren't there? So there isn't necessarily the level of costs that you might be expecting. Is that fair?
Yeah, a lot. I have seen increasingly that, like as I mentioned, that the landowner is being expected to put their hand in the pocket a bit more because the grant funding has just reduced so significantly in the last 12 months. But yeah, it's more the ongoing maintenance costs, I guess, rather than that point, and then considering whether they can be claimed against the rest of the business. And my view, actually, just thinking about it from the previous question, is, if you are doing that for the purposes of your business, you're going to have a legal requirement to get to net zero. Therefore, you are planting to generate credits to get to net zero. It seems to meet the wholly and exclusively tests, and therefore should be an allowable deduction. And potentially, you're not within the standard commercial forestry because you are doing it for your other business. Which is really interesting, isn't it? That the dual use of commercial.
And I'm just thinking, because we've been doing loads of things on BNG within the group that I was talking about, and actually we'd ignored the insetting in effect, which is when developers do the BNG in-house themselves. And actually, I'm wondering if we do need to think about it because it'll be relevant to insetting of woodland and peatland credits elsewhere. So that's useful food for thought, I think.
Great, thank you. We have a final question from Jill, who says, it sounds like a lot of the tax treatments are relating the situation back to the land, which I agree with, she says. There seems to be a bit of pressure / assumption that the carbon units themselves are an object. I think this hasn't been settled in law, and it's much better to think mostly about the land itself. However, if the units were seen as separate objects of property, do you think that would change the tax treatment?
Yeah, we've gone around this, haven't we, a lot in the group?
Yeah, we have, and so Jill is absolutely right. We and there've been papers from the CLA where they've asked the Law Society, needs to provide some guidance on what actually is a carbon credit, what is a unit, which then would assist with the accounting treatment, which then leads into the tax. The reason because of the limited time here, we focus just on the landowner and generating the units and the credits, which is more akin to that sort of manufacturing or service. But if you've then got somebody who's purchased a unit or a credit, and then potentially wants to sell on, or what happens further down the line, then yes, you have disconnected that unit or that credit from the land. What is the tax position thereon? I think at the moment we're still going to have to fall to base principles, and potentially we're looking at capital gains tax or income tax, dependent on why that person has bought it. Have they bought this unit to hold long term to increase capital value, or have they bought it and they're going to buy a number and be trading them? Then we fall into the income rules. But I personally haven't seen enough activity in my experience, and I asked a couple of the big law firms before presenting here, saying that I've seen a couple of transactions a couple of years ago, but not a huge amount since. Even though we talk about it a lot and discuss the technical stuff. And so the gut instinct is that a lot of people are still sitting on units and credits, although Susan, you had mentioned that there's more data becoming available in respect of transactions.
Yes,
Yeah,
sorry,
Susan.
On you go, please.
We've really struggled with it. We just went round and round because when we first, I think that it's the way it was presented as like, we are creating these units and this is what is being measured. And then actually when you look at the other schemes like BNG, the unit is used to work out how much land you do need to do something good to. But somehow the concept of the unit is much less clear in the other, I think in the other schemes than it is as fundamental, possibly because it's more of a tangible thing to measure in the woodland. There was a tree and there's now a bigger tree and a bigger tree, and therefore it has an appealingly attractive quality to say. So yeah, it's a good question, Jill, and the groups and the tax have really struggled with, is it just part of the land or is it something separable? And once it's on the market, it is something that is traded. But it's just trying to, can we conceptually say for the landowner it's part of the land, and for other people it's part of something that we trade?
Great, thanks both. Vicky, Garance, I don't know if you had anything to add to any of those questions at all.
Nothing much from me, but I was just going to add, I did put a link to, unfortunately, like Jill said, it is based on assumptions, but there is some information on current kind of ownership of carbon credits. But until we get that ironed out, it makes it quite difficult.
And from me, just I think there's quite a lot of conversations going on about insetting and also what that means and how we define it, and whether it does mean there is no sale or there is a sale within the supply chain. So I think there's still a number of things to work out there as well, and before we can give further advice on that as well. And I've just put a couple more links in the chat for anybody who's interested in the volume of sales or the estimate of that which is sold and not sold. So hopefully that's useful to you guys as well. And otherwise, just thanks very much to Lisa and Helen. I'll hand back to you, Susan.
Great, thank you. We do have one really final quick question from Paul, asking about the Ecosystems Working Group and where they might be able to find more information out about that.
At the moment, it's fingers crossed that we'll get something out. We're waiting for some draft guidance on BNG, but a lot of it's kind of confidential, so we can't necessarily share things. But I am hoping that something will appear on gov.uk at some point. But at the moment, we've not been able to publicly share the kind of meeting minutes, I'm afraid. But I say, happy to receive comments in about areas of concern that we can raise on the group, and happy to raise things for people. I'm really sorry I can't immediately reciprocate with back out, but I am hoping that as the government progress and we get the draft guidance, that then we can hopefully kind of get it out to people and share it.
Yeah, there was a limited window of opportunity, wasn't there, to put yourself forward to apply to be in that working group. And if you've missed the deadline, you can't now get into it. So it's like a closed group. And I don't actually know if everybody who applied was given a place or if they did really filter through.
You had to write a little 300-word essay and apply. So yeah. And that's a shame. So I'm trying to get out what I can, but at the moment they've been a bit cagey about it. So yeah, happy to receive in, and as soon as I can reciprocate out, what we'll do.
And we'd be happy to help with that as well through our Woodland Carbon Code newsletters. I'm sure the Peatland Code team would be happy to help too. Okay, well, 5 minutes over time, so thank you very much for your fantastic presentations, and thanks to everyone for their excellent questions. I'll just launch a very quick poll to gather some feedback from today's session. If you could just take a little second to complete that, it'd be very appreciated. Hopefully that's working okay. There we go. So yes, all that's left for me to do is to thank you all again for your presentations. Thanks to everyone who's attended today, and please do get in touch if you have any questions that we've not managed to cover today. I think we are planning another webinar soon in our series in July. That will be on the subject of the new version of the Woodland Carbon Code. So do keep an eye out on our social media channels and our newsletter and website for details on that. But for now, thanks everybody. Enjoy the rest of your day. Thank you now. Bye-bye.